Hello and welcome to the CNBC-TV18 Mumbai newsroom. I'm Ekta Batra and with me is Pavitra Parekh. You're watching your stocks on the channel this afternoon. Well, it's turning out to be a day where there is festive cheer, which is spilled on in terms of lower volumes and participation. I wouldn't really say that about the markets at this point in time because we have the Nifty, which is down around 74 odd points. The sensex, which is sluggish as well, so it's lost over 300 odd points. And we have the bank Nifty, which is a bit sluggish as well. The only probable, thing which is managing to light up the market is obviously the broader markets, with the mid-cap index managing to hold its head above the water.
Oh, absolutely. And the small caps also, for much of the trading session have been doing quite well. So there is a lot of action in some of these individual names, like Ekta pointed out. And, even for the market, while we are seeing significant red, even on the Nifty Bank, there has been a good recovery from the lows of the day. We'll talk more about that, but let me quickly invite our guests on this show, and then we can get to all of the queries that you've sent in as well. We have Rajat Bose joining us, as well as Shahina Mukadam. Rajat is going to help us with all of the technical side of things, and Shahina is going to take us through how the fundamentals are looking of all of these companies that you've written in about. So Shahina, Rajat, thanks a lot for joining us, and season's greetings to both of you. Wishing you both a very, very happy Diwali and, beautiful year ahead as well as we get into Samvat 2080. There are a lot of queries which have come in, and I'm going to get straight to them. We have Raman who writes in. He says he has 30 shares of Hindalco, which he bought at 350. He wants to know whether he should stay invested or book his profits and exit this one. So he bought at 380. The stock is currently at 485. We also have the earnings. In fact, we were speaking to the management as well earlier. Shahina, you think this is one that you can, be comfortable holding for a while, especially considering that the entry price is pretty good?
Yeah, he should continue holding. While I think next quarter we may see, the stock price consolidate for a couple of months, because they have indicated that the next quarter there would be some shutdowns. And but I think we are likely to see a better second half of fourth quarter. So one can continue holding because the management has guided that the EBITDA per ton is likely to be above 500 for the second half on an average. So it looks good. Current levels, one can continue to hold.
Okay, all right. Rajat, would you have a view on that? Oh, Rajat doesn't. I don't think Rajat has a view, but in the metal space.
Hello, can you hear me?
Is our voice reaching you? We can hear you.
Yeah. Your voice is reaching me, and you asked a question on Hindalco. But before that, happy Diwali to you, to both of you, also your colleagues and all others in CNBC, as well as our beloved viewers of this channel.
Absolutely. Wishing you, Rajat, your team, as well as your family, all of the cheers for the festive season. Thank you very much for your wishes. But if you have a view, if you don't have a view on Hindalco, do you have a view on any of the stocks in the metal space?
No, I would say that I can talk about Hindalco right now. Metal space, there would be a number of stocks, but at the moment, Hindalco looks to be pretty positive. I would say that 470 to about 450 would act as a major support area, and unless 450 is taken out on the downside, there is no question of getting out of this position, and the investor has entered at a good rate, so one can continue. And over a period of time, if it manages to stay above 500, then expect further upsides, and resistance will come around, say, 550 to about 600. In between, there will be some selling, but overall long-term trend is up, intermediate trend is up, so there is no problem. The short term, there would be some volatilities.
Okay, all right. Well, let's get in another query now. We have Geeta Kapoor, who writes to us from New Delhi. She holds 30 shares of Zomato, which she's bought at around 150. She asks whether to book her losses or to stay invested at current levels. Well, Shahina, what would you recommend on Zomato? Would you probably say to book your losses, stay invested, ride the storm?
No, I think she should stay invested, because I think the worst of the times are behind Zomato. Even Blinkit has now started contributing very strongly to revenues. And also, I think FY25 is likely to see the whole company doing pretty well in terms of profitability. Valuations, of course, we can't look at it as of now. Probably if you look at it on a longer term, it looks interesting. So keep a stop loss, continue to hold.
Okay, continue to hold this one. Let's get into our next query as well. We have Ramesh Rajgopalan, who writes in from Tamil Nadu. He says he has 4,000 shares of RailTel, which he bought at 250 rupees, as well as 1,000 shares of NTPC, which he bought at 235. He also has 1,000 shares of Tata Power at 250, and he wants to know whether to hold these investments, should he get out of some, and what he should do with all of these stocks that he's mentioned to us. So 3 stocks there: RailTel, NTPC, Tata Power. Shahina, what would you suggest on this? Some of these names like RailTel, he's bought at 250. Of course, these have been great wealth creators, but the buy price is a little bit high there. So I mean, it's at current level. So I don't know how much of the gains he would have really seen in a name like this. But do you think that there's lots more to go in some of these?
Well, the PSU whole segment is still, a lot of buying is coming in and a lot of interest PSUs are witnessing. And these 2 stocks, RailTel, of course, RailTel has doubled if you see the last 1 year. But going forward also, I think valuations are not that expensive. And the order book is pretty strong because they continue to get good orders from railways. They're getting orders from smart cities. So I would recommend he continues holding. Then for NTPC also, is the largest power generation company. And they're talking of doubling their installed capacity over the next 10 years. Also doing well in renewables, good growth. So I would continue to hold even NTPC. Now Tata Power, I think, he may see some bit of softness over the next couple of months. But if you're looking at a long term, I think Tata Power also has its plans in place. And also, debt is an issue, but they're trying to control it, reduce it. So I think all the 3 companies, he can continue holding and review it after a year.
Okay, all right, Rajat, would you have a view technically on RailTel, NTPC, Tata Power?
First of all, RailTel is part of the PSU pack that is doing pretty well. So from that perspective, and also the recent moves in RailTel, I'm talking about price moves, it is very encouraging. It is actually going every day it is touching the upper Bollinger Band. I'm referring to 20-day exponential moving average based Bollinger Band. That is a sign of strength. And unless it falls below 240, there would be no problem even for short-term traders. And for the medium-term traders, I would say 220 would be the stop loss, below 220, and below 200, any long-term player. Apart from that, I would the other stock that you asked for, NTPC, that's also pretty good. Unless it falls below 225, one can continue to hold on NTPC, but NTPC's moves will be somewhat slower because it is now getting into a consolidation. I would suggest that NTPC may be held at current prices, but if the investor wants to choose another stock that has real very high potential among the PSU pack, that is NMDC. NMDC, why I'm recommending it? Because for 9 long years, right from July 2014 to about November 2023, 9 years it has consolidated between 50 and 150, most of the time between 50 and 100. And now it is already on an upward march. Even yesterday it performed pretty well in the Murat session. And my targets there will be 319 and 390 on the upside. NTPC looks very good. One can buy here with a stop below, say, 125 for long term. Very good. And regarding Tata Power, I quite agree with Shahina that it requires a little more gumption, but it is also a stock you can continue to hold unless it closes below 240.
Okay, all right. Well, those are 3 stocks in terms of a technical as well as a fundamental query and answer there. Let's get to another question then. We have KS Rao, who writes to us from Andhra Pradesh, holds 100 shares of Jyoti Labs, which is bought at around 200 odd rupees. So sitting on a good profit there, and is a long-term investor, wants to know what to do, whether he can hold these shares for a period of another 3 years. Well, Shahina, what would you recommend on Jyoti Labs? Sitting on a good profit there, but 3 years hence, do you think that this could probably see further returns?
I do think so. It is a very small FMCG company compared to the rest of its peer group. At the same time, the balance sheet is strong. The second quarter numbers were better than expectations. They have got good brands in their segments of, I think, detergents. They've got fabric care, personal care, good brands. And valuations also are not too expensive. They are in line. I mean, they're fair. So one can expect a slow and steady up move from here on. I don't expect it to be a multi-bagger. At the same time, I could continue, since the investor has gotten at much lower levels, he can continue to hold for the next 3 years. I think he'll get a decent return.
Okay, can continue to hold this one. Rajat, what is your call on Jyoti Labs? I mean, it's done very well if I look at a one-year chart, and it's pretty much near its highs as well. But do you think the upside is intact?
Yeah, upside is intact. There is every reason to remain invested in Jyoti Lab. Only negative is that in the recent past, there had been occasions when 7 or 8 successive circuits right at the opening, and that remained. This kind of stocks actually creates problems when exiting. But otherwise, I would say that if it were to take out, say, 75, as I see on the monthly chart, this is a long hiatus that it had from nearly, again, another 10 years kind of stuff. After that, the breakout happens, and if the breakout sustains, then it can move up to 140 to about 160 on the upside over the long term.
Okay, all right. Well, definitely given very good returns. Jyoti Labs, that one. It's up around 100% in the past 6 months. We'll take a quick break, but we'll answer more of your stock queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks on CNBC TV18. We have with us Rajat Bose this afternoon, as well as Shahina Mukadam to answer all of your questions. Well, let's get to another question now. We have Balu, who writes to us from Bangalore. He holds 580 shares of Coal India, which he's bought at around 260. He wants to know what to do, whether he should hold this particular stock or whether he should book profits. Well, what a great day to talk about Coal India, considering it's the top gain on the Nifty. And Balu's sitting on a very good profit also when it comes to Coal India. Well, Rajat, let's toss it over to you. What would you recommend on this particular stock? It's given handsome returns of around 55% year to date. Is it good for more?
See, for the last 3 months, it is mostly a vertical run. But there is no sign as such to say, either on the daily chart or on the monthly chart, there is no sign to say that its upswing is already over. So I would suggest somewhat a deeper stop loss of about 270, because before that there is no technical stop loss possible. So I would use the 270 stop loss and continue to hold on. On the upside, 400 to about 440 would be the target. There is no point talking about time span because it's rising pretty vertically on the monthly chart. So whatever time frame you give, probably it will complete that target before that.
Okay, let's ask Shahina if she agrees with this. Shahina, what do you also think that this is a good stock to hold? I mean, we had the results just come through very recently, and it's been a beat whichever way you look at it. It's not, trading at very crazy valuations also. Do you think in that context it makes sense to hold, or would you say it's good to book some profits considering how much it's rallied?
I would agree with Rajat and you that, the numbers were good and the investor can continue holding the stock even going forward because as we saw, coal prices were pretty low in the last quarter and they have done pretty well despite that. And as of now, we are seeing the prices of coal stabilizing, international prices. So I think the future is likely to be better. He can always review it next quarter or maybe in a couple of months. But as of now, he can continue holding.
Okay, continue holding Coal India. That's the view from both of our guests for now. The next query is from Shankar Swami, who writes in from Varanasi. He holds 47 shares of Indian Hotels, which he bought at 412. He wants to know whether to hold or sell, and also wants to know if he can invest in Krishna Forgings. All right, let's talk about Indian Hotels first. So, seeing just a minor loss over there. Like we mentioned that, the buy price is pretty much close to where we are at right now as well for Indian Hotels. 412 is where he bought. Shahina, the results were quite good. The management is sounding positive. They have a solid plan in terms of, what they want to add to their hotel portfolio. What do you think about this one? You think it's good to hold as a long-term investment?
Yeah, definitely it can be part of a long-term portfolio. See, it's never a cheap stock. Like if you see 1 year forward, 23 times EV by EBITDA doesn't make it cheap. At the same time, the numbers, even the current quarter were a bit affected by the international operations. I think going forward, if you're looking at a company which is growing, they're talking of growth of 10% revenue CAGR over the next 3 years, 15% EBITDA growth. CAGR growth. So I would say that the valuations are more or less, it's expensive, but justified to continue holding. And the second question, whether he should invest in Krishna Forgings, I would say he can. He can take an opportunity, at any dip to get into the stock, because while the Q2 numbers were good, I think even going forward, they have announced a QIP, which is likely to bring in about 1,000 crores over the next 2 months, and this is going to be utilized to, that is what the management claims, to repay some debt and to also make some acquisitions, probably fund the acquisition for the casting plant that has been talked about. So I think balance sheet also will start looking better. Valuations are pretty reasonable, so he can look to get into Krishna Forgings.
Okay, Rajat, would you agree with that? What's your view on Krishna Forgings?
Well, regarding Krishna Forgings, I would say that as of now, it looks pretty good, but it needs to take out 760 decisively if you were to see fresh gains happening, because it is around these levels between the 720 and 760. A lot of supplies are likely to come, because earlier when it reached those levels in the month of September, there had been quite a bit of selling. In fact, the highest volume bar is in the month of September. So I would say that if it fails to take out 750, 760 range, book at least part profits, and rest you hold on with a stop below, say, 650.
Okay, all right. That's on Krishna Forgings. Let's get in another query now. We have Shaju, who writes to us from Kochi. He holds 1,530 shares of Petronet LNG, which is bought at around 195.9 rupees. So just about sitting flattish with a marginal gain. Wants to know the future prospects of his investment. Shahina, would you have a view on this?
I would suggest that he exits, doesn't continue to hold it for the longer term. Petronet LNG, as the management is sitting on cash, but they are announcing certain projects which I think are going to be a big impact on their balance sheet. I would not like to take that risk, and I would suggest that he exits. There's so many stocks in the power sector, in both I would say in the energy distribution, energy production. So he can switch, even the financing, PFCs. So I think he can switch.
Okay, can switch out of Petronet LNG. Rajat, your call on this one. I mean, of course, we know the stock hasn't done much. It's actually, I mean, if I look at just the year to date, it's down around 10%. But would you keep the faith in this kind of stock?
I would broadly concur with Saina, because this stock has a habit of going up and then crashing on the downside. Even here, you can see similar thing. July, there was a big rise, and after that, it is continuously falling every week. So if one is holding it below 185, one should definitely exit. And if it moves up and fails to take out 220, definitely that is another level you should get out. This is not a stock. See, it is 197. I tell your investor to buy NMDC, he will recover much more money. Look at the base formation there compared to the distribution formation that you see on Petronet. That's the problem. Petronet is very weak, whereas NMDC can give you solid returns on the upside.
Okay, all right, Rajat as well as Shahina, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those queries. That's all the time that we have on the show, but do remember to email us all of your questions and we'll address them with our experts. Stay tuned. Closing bell will take you through the last hour of trade.